YouTube, what it do? It's Little Petty coming back at you guys with another stock market episode. All right, you guys, in today's episode, we got a lot to talk about. I didn't drop a video yesterday, so we're going to fill you guys in on the small account challenge that we're growing, the business options trading account. We're going to go over that. We have some plays that we went over. We sold some plays, got some profit, took on some trades today. We're also going to talk about the overall markets, where I see the markets are going to be going in the next short term, 32 months. What are the probabilities? And yeah, so as you guys know, right now it's earnings season, so we got a lot of opportunities on the board, and we are going to be trying to take advantage of this opportunity by selling options contracts and just staying focused on the strategy. So if you're new, like, share, comment, and subscribe, and sit back, stay tuned, because we're about to get into this lesson / episode. All right, so without further ado, let's go ahead and talk about the stock market. So as you guys can see right here, the stock market, we had this downtrend, like I said in my last few videos that I've been dropping, and I did not have no puts down this whole time, so I said I'm just going to wait for the bounce and I'm going to set up and buy calls. So that's what we did. We bought calls. We've been taking profit along the way, and as you guys can see, basically the bears have been getting squeezed. So if you guys look right here, this is the SPY chart of the 1-day chart, and today we had another short squeeze. So yesterday was basically a fake out, and today was a breakout / short squeeze. So I would expect to see the markets to continue higher. That's what we are getting out here. The bears are still getting squeezed until further notice. So let's go ahead and look at the market watch so we can get some visuals. And as you guys can see, all the indices basically had green days around the board. So let's get into the Dow Jones. The Dow Jones, they had a green day. Microsoft leading the way, and Visa up 6%, Apple up 3%, Intel, they reported earnings the other day. They're up 5%. The only down stock in the Dow Jones today was basically Walmart. Johnson & Johnson had flat days. UNH had flat days, but Walmart was the down day. And if we go ahead and check in on the NASDAQ, we had Google that reported earnings. They beat. The stock gapped up about 100 or something points. So they were up about almost 9%. Microsoft 4%. So you guys can see informational technology was good. Communication services. Healthcare was a little laggy, but overall. And if you look at the Russell, we had the financials. They had a big run up today. And in the SP 500, we had financials doing pretty good. But the biggest updates today were informational technology, communication services, with Google leading the way with the good earnings report. So now let's go ahead and since we kind of see where the markets are going, let me give you guys a recap real quick. I believe that the markets are going to come up here and test this 297, and then possibly come up and test this 313. So these are the ranges that I'm looking at. We did put this resistance line up here. It finally gapped above this support, so maybe a possible pullback down to 281, 273, maybe another lower high. So maybe about 280, 280-ish, and then a pop. So that's what I'm seeing in the markets. But let's go ahead and talk about some of these earning plays. So if you guys come over here and check out into the account, we're going to go ahead and talk about what we did yesterday. So let's go to the activities and look at yesterday. So yesterday we sold out of our Tesla play, and then we also sold out of our Boeing play. Now we're going to talk about that, and then the trades that we did put on yesterday. We sold Starbucks credit spread for earnings because they reported earnings after the bell on Tuesday. So their earnings came out. They actually missed on revenue, but they beat on guidance. So we'll go ahead and get into that in a little bit. And we also put on an AMD Iron Condor. So we sold an AMD Iron Condor for their earnings play, and that play is actually up right now. So let's go ahead and talk about those trades. So on the Tesla trade, let's start with the Tesla trade. So So let's go to the daily chart on Tesla. I like this chart. This Tasty Works. It's pretty cool. Tesla. So we got the Tesla chart. So we sold. Let's come over here to the options. So we ended up selling. What our play was, we sold this. Yes. So on the 23rd, we sold this 665 put credit spread, and we received a credit of $87 or $88. Now what we did, why we sold that, is because Tesla had a run up to the earnings, so we were basically playing the premium crush on that. And the way the trade works was basically, if Tesla was not to come down below this strike price, then we would be able to collect the premium. Now we ended up selling out of that early for a $57 profit, and I'm going to show you guys how that works. So if we come over here to the activity, now the strike prices between Tesla, the contracts that we sold, were $2.50, and we received a credit of 0.88. So we paid $162 to receive the credit of this trade. Now when we closed the trade out, we ended up selling the contracts back. We ended up selling them out yesterday, and we got a credit back of, so this is how you do this. You'll go 88 minus 31. So that would be your max. That would be the profit that you get after these contracts had dropped. So that's what we got. We got a $57 profit. And if you want to look at what the percentage was, so you would take the 157, divide that by 162. We got a 35% return on our money for this investment. So that's kind of why I like to sell option premium. You can take your small trade, and you can get pretty good returns. So we got a 35% yield on our money on that trade. We closed it out. We did not want to hold through the earnings report because this was a bigger trade for our account, and the main thing about this account is making sure we have the buying power and our risk is allocated. So as you guys can see, we got the account balance at about 1,100 right now for buying power, and we are still holding some plays. So now let's go ahead and talk about the Boeing play. But one last thing, as you guys can see, Tesla stock basically ripped up, and now if we come into the 1 minute chart, you can see on their earnings report they actually beat. So that trade more than likely is gonna go. Those contracts should go worthless because right now Tesla stock's trading at 870. So anybody that bought puts, basically you're gonna lose 100% of your value. But if you sold the contracts, then hey, you're gonna make some money. Now on the flip side, if you sold calls, which we don't really like to sell calls because stocks can go up infinite, but at the same time, there's times that you want to sell your calls. But yeah, if you bought some calls, you're probably going to make a little bit of money, but the premiums were so inflated. So if you come down and look, you had to, so these 805s, it's a $43 premium. So if Tesla stocks, you're going to start making profit after it gets past the 43 to 840. So that's just something to take into consideration. Now let's go ahead and look at the Boeing play. And we're going to go to the activities and show you guys. So we sold these credit spreads, and then we ended up closing it out for a $6 profit. We took a small profit on this one, and the reason that we ended up selling out of this one early, let's go to that daily chart, because basically Boeing was coming close to our strike prices. We wanted to basically make sure we did walk away with the profit, and we did not want to hold through the earnings report, as you guys can see. So we closed that one out because Boeing, they reported earnings this morning, and they actually missed on guidance, but the stock still ripped up. So, but the way I was looking at it was, yeah, we can risk because we had about $70 on the trade, $75 or whatever on the trade. We could risk that $75 to collect that extra $28, or we could just take the $6 gain and reset. So it's basically still a winning trade, but it was probably like a 5 or 10% gain. So that was the reason behind selling the Boeing call, or the Boeing put credit spread. We did not want to hold through earnings, but as you guys can see, if we go to the 1 minute chart, these contracts should work out because the price that we couldn't get below is this 120. So as you guys can see, we're about $20 away. So that trade was a winning trade overall. And yeah, so now we're gonna talk about what we actually sold yesterday. So let's go ahead and look at the activity. So we sold the Starbucks and we sold the AMD Iron Condor. So let's talk about the Starbucks play first. And we can come to my positions. You can see right here, we ended up selling 4 of these May 15th 78 puts, and we got a credit of 22 cents per contract, and we ended up selling 4 of these. So the width, let's go ahead and pull out the calculator. I gotta stop closing that. So 50-cent width minus 22 cents for the credit that we received, we paid $28 per contract. So we basically bought 3 of these. So we spent about $84 to receive a credit of $88. So this is like a 50-50 trade. I like the trade. I'm bullish on Starbucks. We didn't sell the Iron Condor. They also did report earnings after the close. So this was another earnings play that we set up. But the reason I was bullish on Starbucks is just because I'm just biased on it. I'm just be honest with you. I'm biased on it. I've noticed Starbucks, their lines have been crazy. So I was like, we're gonna go ahead and sell the puts. Small risk, we'll manage it, and we got time on these contracts. So overall, the stock market keeps going up, and Starbucks should do well. I have faith in these contracts, and that's why I put on the trade. And we are gonna hold. We're gonna hold for a little bit, and we're basically down a little bit on the position, but nothing crazy. Now let's go ahead and talk about this AMD play, because this play right here was actually a good trade, and we're looking to close this trade out tomorrow. We don't want to hold until expiration. We're just going to go ahead and lock in the profits. If we can get a 70% return tomorrow, that'll be good. But let's go ahead and talk about this trade, because as you guys can see, we got about $80 of buying power in here, and with about a $25 gain. So let's talk about the AMD trade. Let's go to this AMD chart, and let's go ahead and look at the daily chart. So on the daily chart, these green bars are basically saying AMD stock needs to stay in this range post earnings, and then we'll be able to receive the credit that we received. Now the play was an Iron Condor, and let's talk about what the play was. So we ended up selling these 52, 51 puts, and then we sold the 60 and 61 calls. So if you look, we ended up getting a credit of $42, and the width between those are $1. So 100 minus 42 equals 58. So we put on a that's how much we paid to receive the credit of this trade. So we paid $58 to receive a credit of $42. Now the reason I liked that trade, like I said, earnings for one, and then also if you come and look at the chart, this is a good range. So I kind of just, like I said, we're playing earnings. We're looking at this as we're being the bank. We're taking on the trades. So that is what we are looking at. So, but as you guys can see, AMD, they got close down to our strike of 52, and they end up bouncing. And yeah, so overall, like I said, I'm kind of just I'm gonna end up closing this trade out tomorrow, and I'm just walking away and looking for the next setup. Now let's talk about what we did in the stock market today, because today was a pretty decent day. We didn't make nothing. We didn't do too many real trades today. We if you look, we basically so if you look at today, we ended up closing out the AAL trade, which we're going to talk about, and then we closed out our Wells Fargo trade that we're also going to go over, and then we ended up putting on a Facebook Iron Condor for earnings. So the stocks that we were looking at today for earnings, we already played the Tesla, we already played the Boeing. We won twice on Boeing, once on Tesla. We wanted to go ahead and set up for Facebook. We are actually shareholders of Facebook, so we are a little biased on that, but we did go ahead and play that. We were looking at the Qualcomms, and we were looking at the eBay, but with our account size and buying power, we just went ahead and went with the Facebook, and we let the other ones play out. So Now, let's go ahead and talk about the AAL play, because we did close that. We did ended up closing the AAL out for 85% profit and a gain of $35. So let's go ahead and talk about the AAL play, because that play was pretty crazy. When I sold that contract, those were actually in the money. So that was a pretty tight risk. But what I was looking at was AAL. So we sold the contracts on this day right here. So the contracts went down, or the stock price went below the strike, and then it ended up popping up and it had a rip up. Now, why did I choose AAL? They report earnings on Thursday. So if you guys are catching on, we've been playing all these earnings plays. And if you guys come over here and look, we got the little petty trading log selling options, and we have won on every trade except for 3. So we've taken 3 losses and we've already won on 8 trades. So, and all these trades have basically been earnings except for the Wells Fargo play, and yeah. So, but overall, the strategy is working right now, and we're going to continue to look forward to this. But back to the AAL trade, as you guys can see, the stock just ripped up. It ripped up. Let's go to the last 2 days. So the last 2 days, you see the stock was trading. We'll go to 3 days or 4 days so you guys can see. So when the stock was below here on Friday, this is when these contracts were in the money, and they actually popped out of the money. So we went ahead and closed out that trade. And like I said, we took a profit. We got a good profit on it. So I was happy with that one. So let's go ahead and look. AAL. So we got a credit of, pull out this calculator. We got a credit of 22 cents, and the strike width was 50 cents. And we sold 2 contracts. So 50 minus 22. Yeah, 50 minus 22 is $28. So times that by 2, we paid $56 to receive a credit of $44. Now, when we closed out the trade, we ended up leaving $9 on the table. So 44 minus 9 equals 35. So that was the profit that we walked away with. So 35, divide that by, what was it? 50 minus 22 times that by 2, 56. So 35 divided by 56 equals a 62% yield on our money. And that was a short time in the selling the option contracts. And so we got a 62% return on our money. So now let's go ahead and talk about the Wells Fargo trade that we closed out. And if you guys can see, what did Wells Fargo do in the past few days? They have ran up. Now, let's go to the daily chart. Because as you guys can see, we were looking at this little slight uptrend. So basically we sold, let's go to the trades real quick. So we sold the 26 puts, and we received a credit of $22. So that was about a $30 trade, and we closed it out, and these contracts still had about 16 days. So these are the contracts that we had sold right here, the 26 and 26.5. So these contracts basically had already dropped down, and we ended up closing that out for a 70% profit. So why did I want to go ahead and sell it out? Well, we had got basically a majority of the meat off the bone on this trade. It was a $30 gain, and our max return was what was it? It was 44. So yeah, we sold 2 of those. It was $44. We went ahead and closed it out for a $30 gain. We got the basically majority of the meat off the bone, and that is how you take advantage of selling options with time. As long as the stock is going in your way, you're still going to make a profit. So we went ahead and sold that out for a profit, and now we are with our buying power back, and we can go ahead and set up some more new trades that if we see any opportunity. Now, let's talk about the Facebook play. So Facebook, they reported earnings after hours, as you guys can see right here. Facebook, they reported earnings after hours. Now, Facebook is one of my largest investments in the stock market. So, with that being said, we are a little biased on that. And we wanted to set up. So, let's just talk about the trade. So, we sold an Iron Condor. We ended up selling the short-term strikes. The IV was up 111%, so that was good. That checked out. The premiums were there. So what we ended up selling was we sold a 80 and a 77.5, and then we ended up selling the 200 and the 202.5s. So if you guys come look over here and that was the only trade that we took on today. Facebook. So we got a credit of $124 to say that Facebook is not going to come below 180 and 202 basically. So, but if you go ahead and we're going to go show you what happened in the after hours, Facebook stock ripped up. They're trading at $214. So this trade right here is more than likely going to be a losing trade because we sold the calls too, and the calls have blown past this $200 strike. Now the good thing about this trade is we do have 2 days. We can still hold on to it. If we have any, even if it's about a 75% loss of our money, we might be able to walk away with about maybe $30. But the good thing about this is if the stock market comes down tomorrow and Facebook comes back down below, I know that kind of doesn't look good right there, but let's look at the 6-hour monthly chart or the year chart. So as you guys can see, Facebook it broke and it hit this high. So the only way we'll be able to walk away with the profit is if the price of Facebook comes below 200 by Friday. And that's saying that we're going to hold on to the trade. Now, we might hold on to it, we might not, but we need Facebook stock to come down. Now, the reason I went ahead and set up that trade and we leaned it more towards the put side or the put side, we were basically feeling that Facebook stock might actually crash. So that's why we went closer. We went closer on the strike prices that were in the money, as you guys can see. These ones right here, this 200 and 205, they're closer to the money when it closed than these 80. So we were giving ourselves more room on the put side, saying the upside, we don't believe the upside has that much potential. And I'm going to show you guys why I was feeling that. And also, like I said, Facebook is one of my bigger investments. So as you guys can see in my main account right here, we have this Facebook January 15th 260 call. And we also have already sold a 205 call for over 130% profit. And we also sold a 225 call for about 200% profit. Now, as you guys can see right here, this contract is actually up 455%. And we bought this contract for $74, and the value worth right now is about, hey, shout out to the trading fraternity. Yeah. But as you guys can see, this contract right now is actually worth $415. So that's a 400% return gain. So I was a little biased setting up the trade on over here in our small account, but overall, it's basically a win-win. If Facebook stock did blow past this, we're going to lose in this account. But these contracts over here that I just showed you, these might be up 1,000% tomorrow, and we got 261 days. I don't know if I want to close it out, hold on to it, but we've already taken profit along the way. We might just close it out. So that's the plays that we had about Facebook, and we're gonna go ahead and talk about this Roku play real quick. So we got this Roku play. I think we talked about the Iron Condor the other day. I'm gonna leave that one out, but the one I want to talk about right now is let's go to the activities. I like this little activity sheet right here. Roku. All right, so Roku, yeah. So we got filled 27. Yeah, we did talk about that. So this one right here, this put credit spread that we got to fill for $38 credit. We sold these contracts. Now, if you come and look at the price of Roku, we need Roku to close above 122 for this to be a profitable trade. Now the time on these the time, as you can see right now, the stock is actually in the money because Roku has dropped below 122. So with that being said, we're in a situation. We were going to close it out, but we did want to kind of hold on to it. So let's go ahead and draw the line out right here so you guys can see for the visuals. So we need Roku to close above this line. And as you guys can see today, it was above there for a little bit. We dropped down, we popped back up. And like I said, setting up this play, this is a volatile stock, so you need to be careful. That's why we only put on a risk of like $60. But if this trade ends up going green tomorrow and we can close out this trade, we will be looking to close out this trade. We do not want to get exercise on any contracts, so we're not going to be holding through until expiration. So that is what's going on in the small account challenge, YouTube. So this is actually a pretty decent long episode. I'm probably going to go ahead and cut it short. I want to show you guys the last but not least, the earnings options, or the most anticipated earnings release, the trades that we're possibly looking to set up for the end of the week. We don't know. We've already hit on a lot of trades. We might set something up. Well, we can't set nothing up for Twitter, but we can always play post earnings too. So the other stocks that we are looking at, I like Amazon. I like Apple. These are just we're probably not going to play them. They're expensive, but yeah. So. And also Chevron. So Chevron, they come up on Friday. And I'm actually a holder of Exxon and Chevron and Abby Vibes. So we might set up some plays for Friday before the open, so Thursday. So stay tuned for another video, YouTube. I'm checking out. You guys have a good one. God bless. Take care of yourself in the quarantine. Stay safe. And I'm out, bro.